Well, we're back with you to take a look at our market action with a special in-house guest. Well, we have Mr. Chris Swift joining us right now from Swift Trading Incorporated in Nashville. And so good to have you with us. How are you on a Monday?
Very well, Marlin. How about yourself?
Not too bad. So from a broker's point of view, how do you look at this Canada news?
Well, from a commodity standpoint, there doesn't seem to be too much in it. The dairy industry will benefit greatly from being able to have now a free trade against Canada with the dairy products. But other than that, most of it looked more like automobiles, and I know there's still a steel and tariff, or steel and aluminum tariff still in effect. But a lot of these still won't come to fruition until I think 2020, somewhere around there. So, but it's good to get some things ironed out. It really is.
I thought it was fascinating when the news broke overnight, and I was kind of watching that Globex trade. And it kind of reacted with a yawn, I thought. It didn't do much. Well, and now this morning, we're fairly sharply higher on soybeans.
and we are. And I'm not real sure that beans are that Canada is the big bean aspect for it. But, you know, there could still be some harvest delays out there, and some of the wet weather that we had last week could be doing something. But other than that, everything looks pretty good out there. So.
All right, let's take a look at prices then, and let's go ahead and go to the big board. We'll start with the corn market. Here you go, Chris. As I mentioned, it was basically flat overnight, maybe fractionally higher, maybe a penny higher, and now we have December corn up 7 1/4. You know, we opened about a nickel higher, and we've added to it. We're only 2 ticks off of our high of the day now. March corn 7 1/2 higher at 375 1/2, right in the middle of harvest too. Keep that in mind, folks. Soybean trade, as we switch over there, you have your nearby November contract gaining 12 1/2 cents now at 8.58. That's a penny and a half off our high of the day. 15 cents now, Chris, off of our low from earlier this morning. January soybeans 12 1/4 higher at 8.71 3/4. Well, can the wheat market join the party or not? Chicago wheat is still lower, and that's interesting. It's down a penny at 5.08 per bushel. We have July 1/4 cent higher. In Kansas City wheat so far, you have your December contract now down a penny at 5.10 1/4, while July is down a penny and a half. Minneapolis wheat, we have that December contract 2 1/2 higher at 5.75, while July is up just 1/4 cent. Quick look at our cotton market here on December. We're now trading 19 points higher at 76.56 after being lower overnight. So you talked about the soybean trade not having anything to do with the Canada news. What do you think is driving it?
I'm not real sure this morning, because after Friday's big downfall that we had after the grain stocks report, it's kind of interesting to see it up today. Honestly, I'm not real sure what's causing today's little up movement, but I've read several articles from some of the large grain elevator companies, and most of them still view this tariff issue as very negative. And when I look at the size of this crop and however prolonged that it's going to be with China, it's still, we have a lot of marketing to do. And that very first move down was abrupt and caught most people off guard, myself included. But now that it is being more and more timely in there, it just looks like it's going to take more time to get rid of it.
Well, we want to see how much impact we have on the livestock side, if any, too. You mentioned the dairy market a little bit ago, and we'll take a look here in a little bit.
Okay.
We are talking with Chris Swift, and we will be back. We will examine our livestock trade right after this. We are back talking with Chris Swift of Swift Trading in Nashville. He's in-house right now with us, and we're going to take a look at our livestock trade. Let's go ahead and take a look at our live cattle futures. And in Chicago right now on the big board, as we open it up here, we have the October live cattle still higher on the day, Chris, but they've eased back a little bit off of their earlier morning highs. We're now at 114.02 per hundred. That would be 57 higher. December live cattle are trading 37 higher at 119.22. That has already come down about $0.50 off of its earlier high this morning. February now up 62. Now, if you look at the feeder cattle trade, we have that October contract up 62 at 158.80. However, it wasn't very long ago here, Chris. We had a high in October of 159.58. So we gave up 80 cents already, basically. November now up 95 at 159 even per hundredweight, but that one's 72 cents off its high this morning. Keep in mind, though, you know, everything is relative because we had a low of 158.10, so we're still 90 cents off of that, too. Now, on the lean hog trade, here we go with a look at lean hog futures. And this is a market that's been all over the place in the past week. We have October lean hogs up $1.70 at 63.82, now up 164. December 83 cents higher at 58.75 per hundred. All the deferreds are basically about 80 to 90 higher if you go out through April. So, Chris, your take on what we're seeing here. Cattle market kind of easing off of a quick flurry on the open. What's going on?
It is. Well, these are new contract highs for most all the contract months in both fats and feeders. So I could see any kind of either A, profit taking from longs on there, or even those that need to be hedged. These are the highest prices available to them all year long. So new contract highs. So I think as we have seen more and more open interest come into the market, it's more interesting now that we've had prices come off sharply, and we are finally starting to whittle down a little bit on our numbers, even though we showed more greater numbers coming into the feed yards last week from the on-feed report. When the Fed raised the rates last week, they told us that household spending was still elevated greatly, and I think that relates to beef demand just absolutely directly.
Something fascinating, though, the cattle market opened sharply higher, and we were just talking about this Canadian trade deal.
Right.
What about the dairy prices? You said it could have an impact on dairy.
It could.
Let's go take a look.
Okay.
I want to see what dairy market is doing here right now. So if we can take a look at the Class 3 milk, we were kind of surprised. We were taking a peek here just a little bit ago, and it wasn't doing much. October 7 cents higher at 15.87. That seems like a muted response. What's
it
the
really
deal here?
does. Well, I'm not real sure, other than we know that we are inundated with milk. So we just have so much dairy production, both here in the U.S. and Canada both, that maybe trade agreements aren't what the answer is to the milk industry right now.
So do you know any details on that agreement?
No, I do not.
How that relates to how much U.S. milk?
No, I do not. I hadn't had time to look through all that. Somehow or another, I think it was just late last night that they were able to hammer that deal out. So, so no, I've not had a chance to look at it.
Literally an hour or two before the deadline. So anyway, all right. Well, good to have you come in.
Thank you. I appreciate that. Sure.
Yeah, good to visit with you, and thanks for the perspective from
absolutely always
broker's point of view here. So anyway, Chris Swift of Swift Trading right here in Nashville. So Janet, the table is.